Hi everyone, very warm good evening. My name is Sagar Agrawal, the moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of Institute of Chartered Accountants of India. It is my pleasure to be a moderator for the webinar on internal financial control and GST litigation. In a short while, we will start this webinar. First, I would like to appraise you about the CPE committee. The role of a chartered accountant is evolving continuously to accept newer responsibilities in a dynamic global environment. The future of CA profession depends on being flexible and open to innovation. Therefore, the need of the hour is to innovate as per the requisites of the contemporary business environment and accordingly upgrade the curriculum and education system of chartered accountancy course. The committee also believes that members of Institute of Chartered Accountants of India should look beyond the traditional areas of practice and seek and explore new areas of business and profession. And hence, the CP committee is monitoring the members by providing guidance through various workshops, seminars, national conferences, background materials, etc. And simultaneously by encouraging young and dynamic professionals to grow as a speaker and master of ceremonies, etc., in CP programs. The program of this evening is as follows. We have two sessions of 1 hour each, and the topics are internal control financials, internal financial controls, and number two, GST litigations through a different lens. Our eminent speakers will talk about above two mentioned emerging areas of professional interest. So we have CA Gaurav Mishra who will talk with us on internal financial control. Let me introduce you with Mr. CA Gaurav Mishra. He is a chartered accountant and has been working with one of the big fours as a manager into risk consulting practice. The core area of his work are internal audit, process transformation, and business process consulting. He has been nominated as co-opted member of Internal Audit Committee of WIRC. He was the author of book Internal Audit Guide for Small and Medium-Sized Practitioners, published by WIRC. So let's welcome CA Gaurav Mishra and let's listen to him from his powerful insights on internal financial controls. Over to you, sir.
Am I audible?
Yes, you are, sir.
Yes. Thank you. Thank you, Sagarji, for giving such a wonderful introduction and wishing everyone Happy New Year. And I think around 500 people have been joined in today's webinar. And this is a very good thing for the CP committee as well, because CP committee always known for the continuing professional education where they organize a lot of webinars and took a lot of steps, be it you can say that study material or any kind of webinars for the knowledge sharing of the members. I would like to say thanks to the CP committee, the chairman and vice chairman of the CP committee for giving me such a wonderful opportunity to speak on the day one itself of the new year. Normally, at the time around 10 years back, when we used to heard from our parents that whatever you will do in New Year, or you can say that for the first day, you will continue to do in the entire year. So I'm very fortunate that yes, CP committee gave me this opportunity to speak. And yes, and business process engineering. These are some of my very interesting topics, or you can say that this is my area where I am practicing right now. Now coming to the part of internal financial control, which is the core topic of today's webinar. So in terms of internal financial control, let us first understand that what is the difference between internal audit as well as the internal financial control. Because if we see, as per the guidance note issued by the ICAI, it is specifically saying that guidance note on internal control over financial reportings. So this is the guidance note specifically says about the control which is going to impact your financial reporting part. It means that anything or any control in your organization which impacts your financial reporting, in that particular case, the organization or directors or management need to focus more from the process control perspective. Internal financial control, if I talk about, so Companies Act specifically talks from the section 138 Companies Act. They are saying that there's a high requirement for the internal audit. But Companies Act never says that whether in-house internal audit is required or outsource internal audit is required. There's a mandate only that yes, there should be the requirement for the certain category of companies for the internal audit. Likewise, internal financial control is there. And as per the different sections of the Companies Act 2013, there's a requirement for the internal financial control. Now coming to the part of internal financial control. Internal financial control, why there's a high requirement for the internal financial control, and what is the difference between IFC vis-a-vis internal audit? So, as a layman language, if we talk about internal audit, it means that you are going to cover the operational as well as the financial process of the company. And if we talk about the financial as well as operational process, it means anything which impact your financial reporting and which doesn't impact your financial reporting. And if we talk about in terms of the subset, whether IFC will prevail over IA, internal audit, or internal audit will prevail over internal financial control. So, internal audit is an entire scenario. There's a risk universe. If I categorize this particular entire thing into one bucket, so in the bucket, there's a risk management framework. And into that entire risk management framework, the second subset comes part of the internal audit. And into the internal audit, there's a small subset which is called as a IFC, internal financial control. And why nowadays IFC is very important. So if we go back in 2017, from 2016 to 2017, seeing the lot of fraud indicators within the listed companies and even big size unlisted companies, government thought that there's a high requirement that we should put the responsibility on the director, on the CFO, as well as the independent director. Because in the board of director, independent directors are always different from the company's internal management. So whatever certifications given by the internal management or whatever the certification given by the external management. So certification given by the external management will always have a greater reliance as compared to certifications given by the internal management. So Companies Act 2013 says that policies and procedures adopted by the companies for ensuring the orderly and efficient conduct of the business, including adherence to companies' policies, safeguarding of its assets, prevention and detection of frauds and errors, and the accuracy and completeness of the accounting records. And the final is timely preparation of the reliable financial statement. Now, what What is this particular definition? This particular definition is simply says to run the company has defined their own rules and regulations for the respective processes. Let's take one example from the function perspective, that procurement function is one of the function. In this entire procurement function, whatever the policies and procedures company has adopted, that who should be the signing authority into the purchase order, what should be the limit, that yes, above this threshold limit, this person is authorized to do the purchase or approve the purchase. That if you want to purchase any items more than 1 lakh rupees, in my example, whose approval is final? So these things are called as policies and procedures. Because suppose if company has set up or company has defined that this is the policies and procedures, and by adhering to this particular policies and procedures, entire procurement function will run. It means what? The external management will say that yes, company, Mrs. XYZ, you have defined your policies and procedures. Now the ultimate responsibility, or you can say that power, or you can say that the responsibility, company is bind by this particular policies and procedures. And if you want to violate this particular policies and procedures, you have to give the declaration that yes, we have violated in this particular case. Or you can say that now ultimate responsibility is on the CEO, on the CFOs or the management as per the company's defined management. So एक चीज तो क्लियर हो गई कि जो भी पॉलिसी एंड प्रोसीजर्स कंपनी ने डिफाइन करी किसी एक पर्टिकुलर फंक्शंस को चलाने के लिए, उसको फॉलो करना भी उसकी जिम्मेदारी बनती है. And now the entire certification. Now what companies it says? आप ये भूल जाओ कि कंपनी ने क्या पॉलिसी एंड प्रोसीजर्स डिफाइन करे हैं. कंपनीज एक्ट बोलता है कि वॉट एवर पॉलिसीज एंड प्रोसीजर्स कंपनी हैज डिफाइंड, independent director or CFO has to give the certification or give the assurance to the board that yes, we have followed the policies and procedures as defined. Now coming to the part, someone may ask these questions. What if that existing policies and procedures are not sufficient enough to mitigate any of the risk? It means what? If there is a high chances, sometimes you will find out that yes, particular risk has not been addressed by the company in their policies and procedures or SOPs, standard operating procedures, what they have defined. So in that particular case, board will give or board will tell anyone, or you can say that normally the third party, that you test entire फाइनेंशियल कंट्रोल कि कंपनी ने जो भी कंट्रोल लगा के रखे हैं, क्या डिजाइन लेवल पे वो सारे कंट्रोल्स कंपनी के सारे प्रोसेस के रिस्क को मिटिगेट कर रहे हैं या नहीं कर रहे हैं. दिस इज आवर फर्स्ट क्वेश्चन. एंड इफ द डिजाइन control is mitigating the entire risk, so now the owners to prove that whether this particular control has been implemented during the entire year or not. So there are two types. One is design level controls and second is operational level control. Means operating effectiveness. It means anything which has been designed and it is completing or mitigating the entire risk. If the design control is okay, it doesn't mean that company has followed the entire controls during the transactions entered during the period. So testing of the design level vis-a-vis operating effectiveness level is both the onus of the company to prove that yes, we have adhered. Now coming to the part, I have categorized these particular definitions into five particular part that what exactly it means. Policies and procedures. I have said that standard operating procedures. In my example, I have taken one threshold limit for approval. It means that delegation of authority. CFO cannot. If CFO is approving each and every transactions, it means there is no decentralization of power. It means that company is totally dependent upon the CFO to approve the entire transactions. This is again one of the major risks. Company cannot dependent on a single person. Segregation of duties. It means if Gaurav is negotiating the vendor, Gaurav cannot book the invoice. एक ही डिपार्टमेंट है जो वेंडर को सर्च करता है इस आइटम के लिए हम कौन से वेंडर से परचेज करें सिंगल डिपार्टमेंट और सिंगल पर्सन is responsible for negotiating with the vendor. Single department or single person is responsible for issuing the purchase order. Single department or single person is responsible for processing of the payment to the vendor. It means that there's a high chances that particular person or department can collide with the vendor. So यही तो बोलता है ना कंपनीज एक्ट यही तो बोलता है कि आप अपने सारे पावर्स को डिसेंट्रलाइज करके रखो कंपनीज एक्ट यही तो बोलता है कि आप एक सिंगल पर्सन पे डिपेंडेंट नहीं रहो कंपनीज एक्ट यही तो बोलता है कि आप अपने डिपार्टमेंट को ऐसे फंक्शंस को कैसे आप सेपरेट कर सकते हो सो दैट कभी भी फ्रॉड के चांसेस कम हो जाए इट मींस दैट पॉलिसीज एंड प्रोसीजर्स एंड यस अगर कंपनी के पॉलिसीज एंड प्रोसीजर्स इस वे में डिफाइंड नहीं है या मैं एग्जांपल लेता हूं जैसे मैंने अभी अपने एग्जांपल में वेंडर सोर्सिंग से लेकर के टिल पेमेंट तक का कंपनी के पॉलिसी में लिखा हुआ कि सेम पर्सन या सेम डिपार्टमेंट सारी चीजें कर सकता है इट मींस दैट कंपनी के जो भी प्रोसीजर्स या पॉलिसीज है उसका डिजाइनिंग ही गलत हुआ है सो दिस इज द major thing which we have to think from the internal financial control perspective. Now, second part is safeguarding of the assets. Sometimes private companies, there may be the high chances for increasing the asset of the company. आप अपने बुक्स में asset कैसे रिकॉर्ड कर सकते हो? There's only one case. अगर मैं लेमन लैंग्वेज में बोलूं only if the person or entity is having ownership of that asset, only in that case asset can be recorded. And suppose you are having the ownership but you don't have the right to use that asset. मैं एक एग्जांपल लेता हूं asset some plant and machinery has been procured and that asset has been mortgaged with the bank. Now what it means आपने अगर असेट को बैंक के साथ मॉर्गेज करा हुआ है तो मॉर्गेज का डिस्क्लोजर करना भी आपकी जिम्मेदारी बनती है एंड एट द सेम टाइम असेट को डिस्क्लोज करना भी आपकी जिम्मेदारी बनती है इट doesn't mean that company will show only the asset side and not the mortgage side in their liability because कल को अगर कंपनी ईएमआई पे नहीं करेगी then what bank will do bank will give the notice and some bank will also confiscate that particular asset तो आपके पास में तो राइट तो नहीं है ना this is about safeguarding of the asset. Now third part is prevention and detection of the frauds and errors. As a part of the internal financial control companies need to implement the preventive control mechanism rather than detective. And it also means that every time you cannot re- prevent any fraud from occurring. Sometimes it's a detective, but sometimes it's a preventive. But prima facie focus should be on the preventive. Now the part is accuracy and completeness of the accounting record. Whatever transactions you are recording in your books, whether that transactions has been recorded at a proper amount with a proper disclosure or not. In my example, the asset mortgage with the bank. And last is timely preparation of the financial statement. So this is the basic objective of the internal financial control. And if I correlate it with the foreign companies, or you can say that foreign countries, हमारे इंडिया में तो इंटरनल फाइनेंशियल कंट्रोल अभी आया, फॉरेन में क्या था? The foreign companies are totally process driven company. They will follow whatever the process you have defined, they will follow that particular process. If you have defined that these are the 5 steps you need to follow at time of executing any of the transactions. In that particular case, foreign company always abide by that rule. But in India, we always find a lot of exceptions. No, this is the reason that why we entered into the exceptions. So in the foreign countries, this is something called as SOX, Sarbanes-Oxley Act. So this is the basic, you can say that the interlinkage between the IFC as well as SOX. Now coming to the part कि रिक्वायरमेंट है किसकी, मतलब क्या रिस्पॉन्सिबिलिटी किसकी है. कंपनीज में डायरेक्टर भी होते हैं, कंपनीज में सीएफओ भी होते हैं, इंडिपेंडेंट डायरेक्टर भी होते हैं, बोर्ड ऑफ डायरेक्टर्स भी होते हैं. These are some of the sections, section 134, which totally talks about the responsibility. If you see the annual report of the company, you will find that director responsibility statement. In that particular director responsibility statement, you will find that there's a paragraph which will totally focuses on the internal financial control, whether the policies and procedures are well in place or not. This is section 134 requirements. The second part, schedules 4 of the Companies Act 2013. It specifically says that independent directors shall satisfy themselves on the integrity of financial information. It means if there's a reliance on the IFC part and if someone is giving that declaration, it means that independent director के पास भी एक लीवे हो जाता है कि that हाँ companies internal financial control properly follow कर रहा है. Now coming to the part of Rule 8, Sub Rule 5 of 8, Companies Act 2013, जहां पे बोर्ड ऑफ डायरेक्टर्स को बोला जाता है कि बोर्ड ऑफ डायरेक्टर्स आप बताओ कि कंपनी का जो भी इंटरनल फाइनेंशियल कंट्रोल है वो फाइनेंशियल स्टेटमेंट्स में जो भी रिस्क अराइज हो रहे हैं वो सारी चीजें मिटिगेट कर रही कि नहीं कर रही है. इट मींस दिस इज द डायरेक्टर्स. अब बात आती है कि डायरेक्टर ने तो अपने डिक्लेरेशन दे दिया, क्या mere declaration will satisfy all the purpose? Answer will always be no. कंपनीज बोलता है कि नहीं, ऑडिटर्स और ऑडिट कमेटी की भी तो जिम्मेदारी कुछ ना कुछ बनती है, हम ऑडिटर और ऑडिट कमेटी को ऐसे कैसे छोड़ देंगे. एंड यू विल नाउअडेज यू लिसन लॉट ऑफ फ्रॉड, लॉट ऑफ नफरा इश्यूज जहां पे ऑडिट रिपोर्ट पे कुछ और लिखे होते हैं. इसका मतलब क्या है, आने वाले समय में इंटरनल फाइनेंशियल कंट्रोल से रिलेटेड जो भी गाइडेंस होंगे वो और डे बाय डे स्ट्रॉन्ग होते जा रहे हैं. सो internal financial control will prevail at a later point of time over the internal audits. बिकॉज अगर कोई चीज हमारे फाइनेंशियल रिपोर्टिंग को इम्पैक्ट कर रही है, इसका मतलब वो मेरे शेयर होल्डर्स को इम्पैक्ट कर रही है, वो गवर्नमेंट को भी इम्पैक्ट कर रही है, वो मेरे लार्जर जो भी मेरे अदर देन शेयर होल्डर्स है उसको भी इम्पैक्ट कर रही है. अगर मैं अदर देन शेयर होल्डर्स की बात करूं, इसका मतलब क्या, एम्प्लॉई है. कंपनी अपने फाइनेंशियल रिपोर्ट में, एक एग्जांपल है, कंपनी अपने फाइनेंशियल रिपोर्ट में बोलती है कि भैया मैंने 50,000 करोड़ का प्रॉफिट कमाया. क्या ये प्रॉफिट सही हो सकता है? नहीं. समटाइम्स इट इज ओवर इन्फ्लेटेड, अंडर इन्फ्लेटेड, एंड लॉट ऑफ थिंग्स आर देयर. Now coming to the part, what is the requirement for auditor and audit committee as per Companies Act 2013? Section 177 बोलता है ऑडिट कमेटी की जिम्मेदारी बनती है कि वो इंटरनल फाइनेंशियल कंट्रोल को इवेल्युएट करे. Now someone will ask the question, okay, Gaurav, I have never seen that audit committee is self evaluating the internal controls. It means what? Audit committee has appointed the auditor perform the evaluation of internal control, or statutory auditor who is signing the balance sheet, they also evaluate the internal financial control. अब बात आती है कि हमने इतनी बार डिस्कस कर लिया कि इंटरनल फाइनेंशियल कंट्रोल हमको इवेल्युएट करना है, बट व्हाट टू इवेल्युएट, दैट वी विल कम ऑन द लेटर पर्टिकुलर पॉइंट ऑफ टाइम. सेक्शन 143 बोलता है, 177 तो ऑडिट कमेटी की जिम्मेदारी बोलता है, 143 बोलता है कि स्टैट्यूटरी ऑडिटर को अपने ऑडिट रिपोर्ट में डिस्क्लोजर देना पड़ता है कि क्या कंपनी के पास में एडिक्वेट इंटरनल फाइनेंशियल कंट्रोल सिस्टम है या नहीं है. नाउ द पर्टिकुलर पार्ट, सेक्शन 143. सेक्शन 143 क्या बोलता है? सेक्शन 143 सबसेक्शन 12 क्या बोलता है? दैट ऑडिटर, अगर कंपनी के ऑडिटर को ये लगता है कि कंपनी का इंटरनल फाइनेंशियल कंट्रोल को टेस्ट करते समय if he find something which is totally considerable, or you can say that require immediate attention, उस पर्टिकुलर केस में क्या होगा? ऑडिटर की जिम्मेदारी बनती है कि वो तुरंत कंपनी के टॉप मैनेजमेंट एंड बोर्ड को बताए. नाउ द थिंग इज व्हाट हैज चेंज. कंपनी का प्रीवियस प्रोविजंस क्या था और करंट प्रोविजंस क्या है? पहले ये था कि बोर्ड, पुराने कंपनीज एक्ट में बोर्ड और ऑडिटर्स के पास में कोई भी रिक्वायरमेंट नहीं थी कि आप कि कंपनी का इंटरनल फाइनेंशियल कंट्रोल कैसा काम करता है. कारों में रिपोर्टिंग होती थी, बट दैट वाज लिमिटेड टू परचेज ऑफ इन्वेंट्री, फिक्स असेट, गुड्स एंड सर्विसेज, जो हमारे कारों में क्लॉजेस थे. बट अभी कंपनीज एक्ट ने क्या करा? उसने बोला कि ऑडिट कमिटी हैज आल्सो द रिस्पॉन्सिबिलिटी, statutory auditor also has the responsibility, board of directors also has the responsibility. So if you see the entire annual report of any of the good company, or you just find out and search on the Google that annual report of Reliance Infra Limited, over there you will always find director responsibility statement, and there will be a para that yes, this particular things has defined. You will find in the auditor report also that yes, this is the disclosure on the internal financial control. So we'll see on the live that कहाँ पे ये हमारे annual report में included होते हैं. अब बात आती है कि यार हमने इतनी चीजें तो कर ली. स्टार्टिंग में मैंने बोला था इंटरनल फाइनेंशियल कंट्रोल, बट जो इंस्टीट्यूट का गाइडेंस नोट है वो बोलता है इंटरनल कंट्रोल ओवर फाइनेंशियल रिपोर्टिंग. To the best of my knowledge, I have never find that institute had issued the guidance note on IFC. Institute has issued the guidance note on internal control over financial reporting. बात आती है कि what is the difference between IFC and ICOFAR? It's a very basic example that in IFC you will perform the testing for the operational control, vis-a-vis in the internal control over financial reporting, you will find the testing of the control which has an impact on the financial reporting. So this is about the difference between the IFC and ICOFAR. अब बात आती है कि IFC कहाँ एप्लीकेबल होता है, ICOFAR कहाँ एप्लीकेबल होता है. So this is the particular table. IFC कहाँ पे applicable होता है? All the listed companies, internal financial control applies. But in case of other than listed companies, and following the certain criteria of the turnover as well as the borrowings, there is the applicability of the ICOFAR. अगर मैं बात करूं आईएफसी, प्राइवेट कंपनीज के केस में आईएफसी एप्लीकेबल नहीं होता, मतलब वहां पे आपको डीआरएस नहीं मिलेगा। डीआरएस आपको कहां मिलेगा? डीआरएस आपको मिलेगा लिस्टेड कंपनीज में या कंपनीज जो टर्नओवर और बोरोइंग के क्राइटेरिया को फुलफिल करती है। So section 134 will not apply on the private company. Section 177 जो कि हम बात करते थे ऑडिट कमेटी के बारे में, वो भी मेरा अप्लाई नहीं होगा, and schedule 4 भी अप्लाई नहीं होगा। So I think there's a very clear cut distinction between the IFC and ICOFAR. Now we'll come to the part that what are the relevant auditing standards. Section 315, section 300 and section 700. 700 will always say about the audit reporting part. 315 or 330 will always talk about the internal control and fraud related standards. So these are some of the key standards where IFC will apply. And this is the common thing. Suppose if you have not followed, then what is the penal provision? Are some of the penal provisions which applies. Now coming to the part of controls, if I talk about मेरा जो definition था, जो companies act का definition है, in that particular definition itself, I have categorized that what are the operational control and what are the financial reporting control. Last में जो था, second बोलता है कि orderly and efficient conduct of the business and safeguarding of the asset. Asset का insurance हुआ है कि नहीं हुआ है, ये मेरा ऑपरेशनल कंट्रोल में आएगा। असेट को सही तरीके से रिकॉर्ड करना will come into financial reporting part. So this is operational control. Prevention and loss and detection of the frauds and errors, इससे रिलेटेड जो भी कंट्रोल होंगे, that will come as an anti fraud control. And last दो चीजें जो स्पेसिफिकली बोलती थी, फाइनेंशियल रिपोर्टिंग कंट्रोल। अगर इन सारी चीजों को मैं मिक्स कर दूं, इट मींस दैट इज कॉल्ड एज इंटरनल फाइनेंशियल कंट्रोल। सो इंटरनल फाइनेंशियल कंट्रोल, ऑपरेशनल प्लस फाइनेंशियल प्लस फ्रॉड रिलेटेड कंट्रोल, इफ वी मर्ज ऑल थ्री इट मींस आईएफसी। बट अगर मैं आईकोफार की बात करूं, आईसीओएफआर विच इज टोटली इंक्लूडिंग द ऑपरेशन एक्सक्लूडिंग ऑपरेशनल कंट्रोल, एंटी फ्रॉड प्लस फाइनेंशियल रिपोर्टिंग कंट्रोल विल फॉर्म पार्ट ऑफ द आईकोफार. This is the framework for the IFC. So अगर मैं IFC framework की बात करूं, IFC framework totally work according to COSO principle, Committee on Sponsoring Organization, जिसके 5 कंपोनेंट होते हैं, ये उसके ऊपर पूरा काम करती है। अब बात आती है कि सर आपने प्रोसेस तो बोला गौरव, बट प्रोसेस में दो चीजें होती है, एक होती है जो एंटिटी बिजनेस एज अ होल काम करती है, एंड सेकेंड थिंग द कंट्रोल विच वर्क्स ओनली रिस्ट्रिक्टेड टू दैट पर्टिकुलर प्रोसेस। अब बात आता है व्हाट इज द डिफरेंस बिटवीन एंटिटी रिलेटेड कंट्रोल vis-a-vis process and audit control. Each and every department has their own function, their own process. This is totally your accounting, finance accounts is a separate process. Purchase function is separate process. Marketing function is separate process. Then you can say that HR and payroll is a separate process. But if we talk about the entity level control, कंपनी लेवल पे जो बजट्स मॉनिटर होते हैं, दैट इज योर एंटिटी लेवल। बोर्ड पे जो भी डिसीजंस होते हैं कि मुझे क्या स्ट्रेटेजी फॉलो करनी, क्या स्ट्रेटेजी फॉलो नहीं करनी है, दैट इज योर एंटिटी लेवल कंट्रोल। ऑर्गेनाइजेशन स्ट्रक्चर्स, ऑर्गेनाइजेशन लेवल पे जो पॉलिसीज होती है, दैट इज योर एंटिटी लेवल कंट्रोल। एंटरप्राइज रिस्क मैनेजमेंट, दैट इज योर एंटिटी लेवल कंट्रोल। बट अगर मैं प्रोसेस कंट्रोल की बात करूं, अ वेरी गुड एग्जांपल, इनवॉइस कैन नॉट, पेमेंट कैन नॉट बी प्रोसेस्ड till it has not been approved in the system by the DGM Finance. This is your process level control. But in the monthly management meeting, in the monthly board meeting, review of budgets is your entity level. So this is the basic difference between entity level control as well as process level control. So this we already discussed that in the previous, that what is the requirement for the auditors vis-a-vis the audit committee as per Companies Act, and what is the requirement for the directors and the company as per the Companies Act. Now sometimes we'll come to this particular part of the later on. So let's come to the particular part of the COSO framework. We discussed a lot. We have discussed section 31 SA 315 as well as SA 330. Both controls are both standards are related to internal control as well as fraud related control. So COSO has a five controls, five component: control environment, risk assessment, control activities, information and communication, as well as monitoring activities. But control environment जो भी इनके पांच है, इनके objectives क्या है? Three objectives we already discussed. One is operation, second one is fraud related, जिसको हम compliance की बात करते हैं. Third one is reporting, timely preparation of the financial statement. If your internal control has been designed by keeping these things into mind, I think this particularly gives the, you can say that company has achieved the objective of the internal financial control. Now part of the control environment. Control environment की बात करें तो there's a high chances that company is totally working, or you can say that majority of the function is manual. It means there's a high chances of the fraud, high chances of the manipulation of the document. So by keeping this particular risk into the mind, whatever the control you will define, whatever the risk, so first we have to assess the risk, that this is the existing process within our organization, and these are a lot of risks which exist into this particular. By keeping these two things into your mind, whatever the control company will define, it means if all these 3 to 5 component has been considered while designing the control, it means that company has achieved the objective of the internal financial control. So these things, if you see, I have simply bifurcated into this particular thing, that yes, क्या क्या ऑब्जेक्ट कंट्रोल एनवायरमेंट, सिंपली यहाँ पे लिखा हुआ है प्रिंसिपल, किस प्रिंसिपल पे काम करता है? Demonstrate commitment to integrity and ethical values, exercise oversight responsibility, establish structure, authority, and responsibility. So if you see, each and every component has some objective, which we have discussed in our example. So it means now the COSO framework, which was being followed by the foreign companies in deciding the SOX or defining the SOX related controls, that we are following the same thing. So now coming to the part of, someone will ask the question or someone may ask the question कि आपने इतना तो बोला कि इंटरनल फाइनेंशियल कंट्रोल ये होता है, इंटरनल फाइनेंशियल कंट्रोल वो होता है, क्या कंपनी रियली इन सब चीजों को फॉलो करती है? यस, लिस्टेड कंपनीज के केस में देयर इज नो चांस to not to adhere the internal financial control. They have to report to stock exchange also. But challenges, where challenges will come? The companies which are totally promoter driven company, the companies which are working since legacy, the people are very aged, the people, their staffs are very adamant. In that particular case, you will find out that people are very reluctant to change to the process, evolving their manual process to automation process. They don't want to integrate or sync the entire functions. अब आप समझो, अगर हमने पूरे डिपार्टमेंट के फंक्शंस को ऑटोमेट करके या मेजॉरिटी ऑफ द फंक्शंस को हमने ऑटोमेट करा और उनको सिंक कर दिया, इट मींस अगर एक जगह गलती हुई, एक जगह हमने वायलेशन करा, तो उसका इंपैक्ट क्या होगा, पूरा एंड तक जाएगा, एंड तक के ट्रांजेक्शंस में जाएगा। आई एम जस्ट टेकिंग वन एग्जांपल। Suppose in the organization uses a SAP systems of accounting, and there's a control. अगर आपको परचेज करना है तो you have to raise the purchase requisition. Based on that purchase requisition, purchase department will negotiate and raise the purchase order with the vendor. Material will receive, the quality department will inspect the material. And after the quality inspection, bill or invoice of the vendor will come to the finance department, and finance department can pass the invoice only if the approved purchase order is there. It means a single control or syncing of the entire activity has prevented the lot of fraud arises during this particular transactions. And suppose if the organization is very adamant, नहीं मुझे purchase order raise नहीं करना है, there will be high chances that same invoice can be booked at a multiple times with the multiple dates of bills. This is one of the very good example. The second example, the entire approval mechanism is dependent upon the single person. It means what? That the power is not decentralized, it's a centralized process. This is again, अगर कल को वो person चला गया, आपके transactions रुक गए. Single person has that power to collate, to manipulate the staffs or the lower level people. It means that these are some of the challenges while implementing the internal financial control. ना बात आती है कि सर आपने बोला कि आईएफसी के कंट्रोल्स को कैसे टेस्ट करना है, कंट्रोल्स होते क्या है? So there's a word called risk control matrix. अगर मुझे कुछ टेस्टिंग करनी है, it means that there are some parameters defined, there are some controls defined to mitigate the risk, and it is the primary responsibility of the company. It is the primary responsibility of the company to implement the risk control matrix. Somewhere they have to document that, no? That for this particular process, these are the risks. And for mitigating these 10 risks, you have to implement these 10 controls. The name is risk control matrix rather than control risk matrix. So आपको जो रिस्क मिटिगेट करना है ना, उस रिस्क को मिटिगेट करने के लिए आपको क्या क्या कंट्रोल इंप्लीमेंट करने हैं. So this is called as risk control. Now let's come to the part of risk control matrix. I'm coming to that particular part on the risk control matrix just to show a real life example. That is, this is one of the risk control matrix. So hope my screen is visible. Now coming to the part, this is the particular process. It's a payroll process, or you can say that payroll functions is this. This is the process, master updation. If we talk about in the HR and payroll, the function will start from onboarding of the employee. And before onboarding, you will need to initiate the process of the manpower acquisition, then interview, then final evaluation. Then after the final issuing of the appointment letter or offer letter, employee will be onboarded. And if the employee will be onboarded, it means what? Somewhere the database will be created. And what is the risk into this particular process? the risk into this particular process that the person who is not authorized to create or update the masters of that particular employee has created or updated. I have the right. I'm from the finance team. I have the right to change the bank account number of that particular employee. After first month of salary, what I'll do, I'll mention my bank account number. And in the second month, when the salary will go, it will go into my account. But it will show in the employee master that yes, this is the bank account number. To implement or to prevent this fraud, what company will do, company will implement the control that yes, restrict the right of that of updation of that master to the restricted people within the HR and payroll team. And there should be some mechanism to cross verify to or to approve that particular changes. Because in case of employee, the blood group, the address, the bank account detail, these are some of the critical details. If this has been altered by the person who is not authorized, this is the biggest risk. It means to mitigate this particular risk, company has implemented the control. Now the part is whether this control is preventive or detective. And you have to identify based on the risk. मुझे इस रिस्क से रुकना है, इस वजह से मैंने ये कंट्रोल इंप्लीमेंट कर दिया. दिस इज कॉल्ड एज प्रिवेंटिव. मैनुअल एरर हो गया और बाद में मुझे पता चला क्योंकि कंट्रोल नहीं था, दैट इज डिटेक्टिव. Now this control may be defined as whether it's a manual control or automated control. Whether the control is, what is the frequency of the control? Whether this control is key control or non-key control. की कंट्रोल क्या होते हैं? जो भी मेरे फ्रॉड रिलेटेड कंट्रोल्स होते हैं, दैट इज की कंट्रोल्स. द कंट्रोल विच इज नॉट फ्रॉड रिलेटेड और वेरी लेस रिस्की, दैट इज नॉन की कंट्रोल. So these are part of the internal financial control. Now the part comes, Gaurav, how the people or how as an auditor, how I will perform the testing. So see, the control how you will perform the testing is like whatever the company has defined the control. You need to take out the sample. You need to ask the document that yes, as per the control, these are the documents are controlled, defined for performing that particular testing. If that particular transactions has a complete set of document or organization or department has followed, it means that your control is tested. And now you understand the testing as per the company's Act 2013, the onus is on the auditor. Section 177, Section 143. Audit committee और auditor के ऊपर जिम्मेदारी बनती है to give the assurance on the internal financial control. Now let's take one example before going to that, because I was discussing that, yes, in the annual report, there's a clause. I'm just in front of you, annual report of Orbit Exports Limited. I'll show where the declaration around internal financial control is defined, where the auditor has also given their assurance. Orbit Exports Limited. Now coming to this particular part, director responsibility statement. Sorry, let me just find out the way. In the annual report, there's a called as a report on corporate governance, and next is director's report. अब यहाँ पे देखो, in the annual report it is mentioned internal control systems and their adequacy. यहाँ पे आपके पास में आपको मिल जाएगी कि कंपनी के पास में एडिक्वेट इंटरनल कंट्रोल है या नहीं है। कॉशनरी स्टेटमेंट भी दे दिया कि वी आर फॉरवर्ड लुकिंग स्टेटमेंट। इसका मतलब क्या है कि अगर आगे चल के कोई भी चेंजेस होते हैं तो वी आर रेडी टू एक्सेप्ट। यहाँ पे भी आप देखो, आपके पास में प्रॉपर इंटरनल कंट्रोल हैज बीन लेड डाउन ऑन। यहाँ पे आईएफसी टेस्टिंग के बारे में इन्होंने एक जिम्मेदारी देकर के रखी है। Auditors and auditors report, this is totally the part of, if you see again, that internal financial control systems and their adequacy. So this I was saying that हर एक की जिम्मेदारी बनती है कि आपको, एंड यहाँ पे आप देखो चेयरमैन ऑन ऑन फॉर एंड ऑन बिहाफ ऑफ द बोर्ड ऑफ डायरेक्टर्स। इसका मतलब क्या है, जो हमने अभी देखा था कि डायरेक्टर के ऊपर भी रिस्पॉन्सिबिलिटी बनती है हर एक चीज के बारे में डिक्लेरेशन देने की। दिस इज द थिंग वेयर यू कैन सी दैट यस, डायरेक्टर को इंटरनल फाइनेंशियल कंट्रोल के ऊपर एक रिस्पॉन्सिबिलिटी बनती है। So I think this is all about the internal financial control. There's a much more than if we will discuss, it will not completed in next 2 or 3 or 4 hours. But this is just about something called as internal financial control. So I would love to take the questions if there's any questions.
Yes, Gauravji, thank you so much for giving the insights on internal financial controls. Yes, we have few questions, and before that, I would like to thank all the audience for joining on 1st of January. Yes, you truly said that people used to party on this evening, but since they have choose to join a professional education seminar, and it's rightly said that success is not just an accident, it's by the way you choose. So yes, let's start with the questions. So first question we have is, you told about the difference between the internal financial controls and internal controls over financial reporting. So they would like, would you like to reiterate what's that, and show more light on that?
Okay, so the basic difference between the internal control vis-a-vis internal control over financial reporting. So if you see, IFC consists of financial reporting control plus anti-fraud related control plus operational control. I'm just taking one example. In case of HR and payroll process, that correct processing of the salary is the financial control. But the second part is changing of the employee's bank account by the unauthorized person is the fraud related control. But the third point is whether the employee appraisal has been done with the proper approvals and rating system is a operational control. So if we will perform the testing of IFC testing, it means that we are going to test the fraud related control plus financial related control plus operational control. But in a normal scenario, or you can say that in a general parlance, we usually say IFC testing. Nobody will say that ICOFAR testing.
Hmm.
But sometimes when we test for the listed companies, We test only the controls which are totally financial reporting controls or which impact the financial reportings.
Mhm. Okay, thank you. Let's move to next question. The next question is how auditors should approach when there are customary practices are in place to establish control but undocumented.
See, normally in case of, so there are two things. One thing is that let us take this case on a very practical way because we oftenly face these type of things. Sometimes you will say that yes, MD has approved this particular transactions. As an auditor, we should report these type of controls at a ineffective controls because even if the MD has approved, say something someone told that over the WhatsApp MD has approved. This is not the WhatsApp. WhatsApp is not a proper mode of communication. And yes, if the approval is not into the proper format, but is into the mail communication or something like this, you can document these each and every document, and you can say that control is effective. But as a part of the recommendation, you can say that your entire approval mechanism is not stacked. But in
Mhm.
case of practically, definitely we should say and we should report as an ineffective control that these are the reasons why I am reporting this control as an ineffective, even if the CFO has approved the verbally or on WhatsApp or MD has approved. So this is the normal practice which I follow in my case. And I always suggest to the people that don't play with the IFC testing because ultimately responsibility is on you.
So I think related to the same topic that we are talking and the same question that we are just discussing. What if the organization is small, like in a private limited company, and the organization is small, and we have to report something on financial control testing, whether the auditors have tested or whether the auditors has encountered controls or internal controls. So how the auditor should report that when the controls are not really established in a small organization?
Okay. So now let's take one example. I think these things you will normally find in the startups. Okay, because so recently I did the audit, or you can say that IFC testing for the entire one of the startup engaged into the credit financing. So over their entire approval mechanism was, you can say that working, they were majorly 50 to 80% working on the manual control perspective. They don't have some automated things. But
Mhm.
now the thing is, because till the time we are not having any documents, we cannot say that the control is totally effective. Suppose if you did, and you have not reported this particular thing into your, you can say that audit report, that company is not having the adequate control system. See, there are two things. One thing is, if the non-key control is not having that sufficient documentation and all, it means that you can ignore or you can, it is the business risk. But if the control which is having the key risk, or you can say that that is totally dependent upon the financial reporting, in that particular case you have to report. So there is no chance. And now you will see that, so let's take practically, you will find that क्या कल को मुझे इस कंपनी से ऑडिटर हटा दिया या मुझे यहाँ से असाइनमेंट नहीं मिला तो, but think from the other's perspective. That is, you can suggest to the company that these are the controls which are ineffective. But yes, going forward, what you should do, you give us the implementation plan, that what actions you are going to take. Because in the, if you will report that control is ineffective, director has to report that what actions they are going to take, and they have to report. They have to mention in their annual report that they have taken these type of actions as a part of the mitigative actions plan. And
Mhm.
from that, you can conclude that yes, although the control was ineffective, but the organization or management has taken the recent initiatives or good steps to mitigate these controls.
I think your responses or answers to questions have must have satisfied the curiosity and the problems our audience are facing while in traditional practices and doing because I think these problems are mostly faced most of us are dealing in small organizations, right?
Correct.
All the chartered accountants or all the practice firms are not dealing with public companies having these. So yes,
Exactly.
you're right, sir, that we have to adopt these things. All right, Mr. Gaurav, thank you so much for giving your powerful insights and sharing knowledge about your your expertise area of internal control financial reporting. Thank you so much. Now we'll move
Thank you,
toward.
Sagar.
Thank you. Now we will move towards our next today's next topic, that is GST litigation through a different lens. And for that, we have our new speaker, Mr. C. Ritesh Arora, who is also a chartered accountant in the field of indirect tax regime with over 11 years of experience and has a vast practical exposure in the field of GST and specialize in handling appellate work and inspection and search cases. He is a member of GST Practitioner Association and has co-authored the book titled Reference Manual on Exports and Imports, Provisions under Distinct Laws, and has completed a certificate course on the concurrent audit of banks. His articles has been published on various platforms like Taxman, TaxGuru, Taxation Library, expert panels, and more than 30 different ICAI branches publish his articles in their monthly newsletters. Additionally, he was a national silver medalist and Punjab gold medalist in judo. So I welcome you, Mr. Ratesh Arora, for your insights and sharing knowledge on GST litigations. Over to you, sir. Thank you.
Thank you so very much, Sagarji, for the brief introduction. A long road to travel for me. Namaste and very happy new year to each one of you who has joined on this special day. At the outset, I would like to extend my heartfelt gratitude and appreciation to CP committee for giving me this wonderful opportunity on this special day, the first day of year, to set the tone how this year is gonna go ahead. When I was approached by the CP committee, they were kind enough to give me date and time of my own choice to take up this webinar. And further, they gave me the liberty to rename my topic, or rather, I would say, name my topic as GST litigation through a different lens. When I named my topic as GST litigation through a different lens, one of my partners, she came in and asked me why you have named it as litigation through a different lens. This is very interesting name. So I told her we all know tools, techniques, methods, methodologies of handling litigation in all the erstwhile law, be it VAT, be it sales tax, be it service tax law, especially income tax law, but we cannot allow the perception of handling litigation in all these law to come and guide us how the litigation will flow in GST. Friends, lot of time, lot of questions are being aired that GST was supposed to be good and simple text. It was brought in to do away with the nuances of all the erstwhile law for ease of doing business, seamless flow of credit, and whatnot. Sometimes the questions are being aired that this demand does not make any sense. It is unreasonable, not justifiable. The way I look into this legislation, the new legislation, GST law, I feel there is a problem in the question itself. Why there is a problem in the question itself? Because we expect the law to be reasonable, provisions to be justifiable, and most importantly, the proper officer to be understanding. Believe me, none of these three things are going to be available when it comes to litigation under any law, especially not when it comes to GST law. Sometimes we talk about intention of the law, intention of the lawmaker. It does not matter. Law is what it is. What is written is the rule of the land, and all the stakeholders are bound to abide by that law, be it taxpayer, be it tax consultant, be it the revenue or the administration side. Everyone has to go by that law which has been written. Article 246 of the Constitution of India gives the power to the Parliament of this country to enact all the special taxation law of this country. For GST, Article 246, capital A was brought in to give the power to the Parliament of this country to enact this special statute. This is not an old wine in new bottle. This is altogether a new law. Law नया है, provisions नए हैं, rules नए हैं, forms नए हैं. The only thing that is old is the officer or the machinery. So we cannot allow that machinery, administrative machinery, or officers to come and guide us how the litigation will flow in GST. whatever time is given to me for today's deliberation. I feel it is very short time to deliberate on such a technical topic, but I'll try to touch upon few of the aspects which are a bit pointed. We are not comfortable talking about those aspects, but I'll touch upon them because I feel it is imperative to discuss our problems. The only situation where the problem persists is when we don't talk about them. The moment we start talking about our problems, it finds its own solution. So, my first question to all of you is, how many of you believe if you wish to practice litigation successfully in GST law, we need to have very good relation with the proper officer? See, there is no need to answer me back because I have been on other side for so many years, and I know deep down the moment I asked this question, your mind gave that answer, and I'm assuming that answer to be affirmative. This is the way how we have been brought up. This is the way we have been taught. If you wish to practice litigation successfully, we need to have good relationship with the administration, with the officer. The only relationship that we all must try to have with the administration is they must hate you. Yes, you heard me right. They must hate you because your letters, your replies, your personal hearings are not giving the officer any of the information that they want, that they require for the case. You are just giving them the bare minimum information that the law entrusts you to give. Nothing more than that, nothing less than that. And believe me, with lot of responsibility from a responsible platform, I said there are enough rights, remedies, and safeguards available under this law to achieve this goal. The law is on our side to achieve this goal. Now, someone might take a defense. How does it matter when we are going and settling things with the officers as long as work is getting done? In my opinion, settlement is not an option under GST law. I'll put forward few of the points for the consideration of all the learned members to decide it through their wisdom whether settlement is an option under GST law or not. For me, it is not an option. Point number one, why settlement is not an option? Whenever you receive any of the favorable orders under GST law, you cannot celebrate for next 3 long years. Yes, you heard me right. You cannot celebrate for next 3 long years from the date of favorable order. Under section 107, subsection 1, if the taxpayer is aggrieved by the order of any of the adjudicating authority, he has a right to prefer an appeal before first appellate authority. Time limit given is 3 months. Under section 107, subsection 2, if the department is aggrieved by the order of any of the adjudicating authority, they too have a right to prefer an appeal before first appellate authority. Time limit given is 6 months. Under section 107, subsection 4, 1 month condonation of delay is allowed. Recently, very interesting case came before us. There was a adjudicated refund which was being sanctioned by the adjudicating authority. It was a considerable amount of refund which was sanctioned. Now the department decided to go into appeal against this refund which is sanctioned by the adjudicating authority. So the departmental appeal was filed against this refund order, and the notice was issued for personal hearing by the first appellate authority. I was working on this case along with a very senior member of our fraternity. I don't know what happened to sir. He took three big files of papers. What was in those files, I don't know. And I just went like this without even a single paper. The appeal was before a very learned authority, the additional commissioner. Revenue took it very seriously. No, normally we don't see any of the officers coming and presenting the case from revenue side, but in this time, three different officers were sitting to present the case from the department side. We went in there. The additional commissioner sir said, "What you have to tell me about this case?" The senior member alongside me, he was about to launch into the reply mode. I just held his hand and said, "Sir, please allow me to speak." It was an awkward moment for him to say no. So unwillingly, he had to allow me to speak. So I said to additional commissioner, sir, this is department's appeal. First, let the department tell how they are aggrieved by the order of adjudicating authority. We'll put forward our rebuttal later. He said, point very well taken. So he asked his counterparts to give the grounds of appeal. They were well prepared. They gave extensive arguments and or comma Blackford Dictionary, Oxford Dictionary, Ramanathan Iyer's legal lexicons were used, judgments from VAT law, service tax, High Court, or in Supreme Court, all sorts of defense was put forward. Now, three of these officers, fourth one, additional commissioner, with a spark on his face and confidence, he said, "Now, young man, what do you have to tell to me?" I said, "Sir, I have a very short point to make. This appeal is time barred. There cannot be any appeal because the appeal was filed in the ninth month from the date of refund order, that too without condonation of delay. There is no exemption given to the department also. If the departmental appeal is filed after the expiry of period of 6 months, they too have to file a condonation of delay application. There was no condonation of delay application on record, so this appeal is time barred. Had it been, there would have been a condonation of delay application. First, I would have challenged the condonation of delay application because this is not an empty formality which the first appellate authority has to do. Rather, the first appellate authority has the responsibility to allow condonation of delay only and only for good and sufficient reasons which are open to challenge by the other side. So the appeal is time bar. Now this brings us to a very interesting question, whether the first appellate authority has the power to condone the delay if the appeal is filed after the expiry of statutory time limits given, 3 plus 1 4 months or 6 plus 1 7 months. Why this particular controversy has surfaced is recently the Honorable High Court of Calcutta has given back-to-back judgments starting with the case of S.K. Chakrabarti and Sons on 1st of December 2023, then Arvind Gupta case, then Sushil Kumar Hazra case on 16th of May 2024, wherein the Honorable Court took a view that Section 107 of CGST Act does not implicitly or explicitly include or exclude Limitation Act 1963. So, by virtue of Section 5 of Limitation Act 1963, Limitation Act applies to CGST proceedings, and if there are good and sufficient reasons available on record, the first appellate authority has the power to condone the delay if the appeals are filed after the expiry of statutory time limits given under the law. In my humble view, this particular view needs revisiting. Why this view needs revisiting? Because if you read Section 5 of the Limitation Act, read with Section 14 and Section 27 of Limitation Act, read with Apex Court judgment in case of Ramlal versus Reva Coalfields 1962, the Apex Court has laid down the principle that once the appeal is not filed within the statutory time limits given, other side gets a vested right, and when it is a vested right, it is very unlikely to take away without the authority of law. Now, there is a very important judgment given by the Apex Court, Singh Enterprises versus CCE 2008, wherein it has been decided that once the statutory time limits given under the law expires, now the first appellate authority is denuded of that authority. There is no authority vested with the first appellate authority to use that authority. What I don't have, I cannot use it. So, no matter how many good and sufficient reasons are available on record, once the time limits given under the law expires, there is no vested authority with the first appellate authority to condone that delay beyond the statutory time limits given. There are also divergent views given by the Honorable High Court of Kerala and Honorable High Court of Allahabad in case of Jadav's Tales, wherein it has said that once the time limits expires, first appellate authority cannot condone the delay. So the lining here is we all have to be very cautious about the timelines given under the law. Now we will discuss few of the draconian provisions under the CGST law. The first one is explanation to section 75 subsection 12, which was inserted by virtue of Finance Act 2021 effective from 1st of January 2022, which says that in case of any self-assessed tax liability remaining unpaid, there is no need to issue you show cause notice. Direct recovery action under section 79 can be taken up. Means if there is any self-assessed liability which is unpaid, direct garnishee order in DRC 13 will be made and money will be taken out of your bank account without putting you at notice. This is a draconian provision under the law. We all know GST is a self-assessment regime, but where do we do our self-assessment? Do we do our self-assessment under section 37, 39, or 44? See, we do our self-assessment under section 31 when we prepare our invoice. When you prepare your invoice under section 31, that is the assessment order. This is the view which has been taken by the Honorable Apex Court in case of Priya Blues judgment and Priya Blues case, and then later on affirmed in case of ITC Limited 2019. Although these two judgments are in the context of customs, but equally applicable to GST law. See, when you are preparing your invoice, all the contours of self-assessment are present there. Supply is decided, valuation, classification, exemption, rate. Everything is decided when you prepare your tax invoice. So you do your self-assessment under section 31. Section 59 specifies that every registered person shall self-assess his tax liabilities and discharge those liabilities in the returns filed validly under the Act under section 39. But we do our self-assessment under section 31. Then what do we do under section 37 when we file GSTR1? We are disclosing that self-assessed tax liability when we file GSTR1 under section 37. Then what do we do under section 39 when we file GSTR3B returns? We are discharging that self-assessed tax liability when we file GSTR3B returns under section 39. The department took a view. You are the one who has done your self-assessment under section 31. You have disclosed under 37 when filed GSTR1. You have not discharged under 39 when you filed GSTR3B return. What is there to put you at notice? Because everything is being done by the taxpayer himself. A lot of hue and cry was created in the market and a lot of cases went before the judiciary. Judiciary came very heavily on the revenue and said, here the rule of the land will stand tall against the over passionate administration, and numerous judgments were given by the courts. Mahadev Construction Jharkhand High Court, Reflex Industries Madras High Court, LC Infra Karnataka High Court, and court said what is the problem in putting other party at notice? In my view also, there is no harm in putting other party at notice. See what will happen if you will put other party at notice. The adjudication process to get completed, it will take few months, 4 to 6 months. Even if there is any demand which is really payable, the department is getting compensated by way of hefty interest. If the responsibility of doing self-assessment has been given to the taxpayers, it has come at the cost, at the perils of hefty interest. 18% interest is there. If you see the demands for 18-19, the interest is more than the tax demand. So it has come at the perils of this. Now, this particular explanation was inserted by the revenue after these judgments were passed. So it means it feels like some MNC is at work and the government is determined not to let anyone get away with any of the undue advantage. Now, the government has further taken cognizance of this particular issue and they have notified Rule 88C by notification number 26 dated 26th of December 2022, read with Rule 142B by notification number 38 2023 dated 4th of August 2023, wherein it has been said that whenever there will be difference between GSTR1 and GSTR3B, notice will be issued to you in DRC1B form. 7 days time limit will be given to pay the liability or give the reply to the satisfaction of the officer. Now, from this platform, I will not comment what is the satisfaction of the officer within 7 days. After that, recovery action will be initiated under section 79 by issuing notice in form DRC1D. So this is a draconian provision under the law. Now this brings us to another important question, whether show cause notice can be issued under section 73 for GSTR 1 not matching with GSTR 3B returns. In my opinion, the answer is no. Put forward my viewpoint why I say there is no jurisdiction to issue notice under Section 73 for GSTR1 not matching with GSTR 3B return. Take a hypothetical situation. There's a boy who has cleared his plus two examination. His board results are out. He has gone to college for admission. College administration is asking him to bring his pre-board results. What is the relevance of pre-board results once the final results are out? Bring this analogy into this particular aspect. Once you have filed your GSTR 9 under section 44, what is the relevance of 1 and 3B? What is the purpose of GSTR 9? The purpose of GSTR 9 is to clear all those mismatches that has happened during the year. So in my opinion, once you have filed your GSTR 9, if there is any discrepancy, notice can be issued from GSTR 9, not 1 and 3B. Point number 2. See why an amendment is made. An amendment is made because amendment is required. If there is no need for amendment, nobody will bring an amendment if everything is going fine. Now, if an amendment has been made to law, section 75, subsection 12 explanation, which says that for issues pertaining to one GSTR 1 not matching with GSTR 3B, section 75, subsection 12 will be invoked, read with rule 88C, then a specific cause of action is there. If there is a specific cause of action, GSTR 1 not matching with 3B, you have to invoke Rule 88C read with section 75 subsection 12 and issue notice in form DRC 1B. You cannot resort back to a generic provision of section 73. That was available earlier also. See, what is the point going back into section 73? That is gross misapplication of law. So it cannot be there. So we have a case reference also from the Honorable Madras High Court cases, Caterpillar India Private Limited versus Assistant Commissioner on in 2023 by Honorable Madras High Court, wherein it has been said that for 1 and 3B difference, DRC 1B has to be issued, not notice under section 73. Point number 3. See, what is the allegation in this particular issue? GSTR 1 you have filed, it means you have raised the invoice to somebody, to your client, you have collected the money, you have collected the taxes, but you have not paid the taxes. Now, this is the allegation of fraud. If I have collected the money, the government's money, and not paid to the exchequer, if it is not fraud, then what the fraud is? So, in my opinion, if one is not matching with GSTR 3B, Section 74 or 76 can be invoked, not 73. That allegation is incapable of bringing home the allegations leveled against the taxpayer's self-assessment done. It is incapable of impeaching the self-assessment done by the taxpayer if Section 73 is invoked in such a scenario. Now, moving ahead, we'll talk about another draconian provision in the law is summary assessment section 64, which says that if the proper officer has evidence in possession, there is no need to issue any notice, direct order can be passed. No notice is required, no personal hearing is required, direct order can be passed. This is a draconian provision because every time the revenue will issue the notice, they will feel they have evidence to substantiate the allegations leveled against the taxpayer. But who will test the probative value of evidence? Nobody will test in such a situation. This is a draconian provision in law, but we'll have to give it to the revenue because they have not pressed section 64. In at least in my circle, I have not come across a section 64 assessment. They have not pressed into action. So we have to give it to the government for not using such a draconian provision. But this provision is available under the law. They have not used it till date does not mean they will not use in future. So it feels like that this law has been written by somebody with enormous experience, field experience in handling the administration in the erstwhile law. All those issues they faced in the erstwhile law have been catered in this law and taken care of in this law. Third draconian provision, in my humble opinion, is Section 151, which says that Commissioner can ask anybody for any information. What is this information that is being referred to in Section 151? What is this information that the officer cannot gather by issuing ASMT 10 under Section 61? What is this information that the officer cannot get by initiating audit under Section 65? What is this information that the officers cannot get by initiating inspection and search proceedings? What is this information that you cannot extract by issuing summons under Section 70? What is this information that you cannot extract by information return under Section 150? So that you have to resort to 151. Again, I reiterate, this government seems determined all the loopholes. They do not want anybody to let go or escape from any liability. They have cornered from you all the angles in this law. Next important provision, which is the most draconian provision in my opinion, and coming back to our topic, why settlement is not an option and why you cannot celebrate from for the next 3 long years from the date of favorable order. Section 108, power of a regional authority, which says that the commissioner on his own motion or ascertainment from the state commissioner or union territory commissioner, if he believes that any of the orders of his subordinate authority are prejudicial to the interest of revenue, he can take up matter under Section 108 by issuing the notice in form RVN 1 and putting other party at notice and affording an opportunity of being heard. He has the power to enhance, modify, annul the demand, and the time limit given is 3 long years from the date of favorable order. Icing on the cake. Even the orders of first appellate authority are subject to 108 proceedings. If the matter is pending before first appellate authority, then Section 108 cannot be pressed into action. But once the first appellate authority has given any judgment, and if it is presumed or perceived to be prejudicial to the interest of revenue, commissioner can reverse that order and immediate set aside. The order will be set aside. Time limit given is 3 long years. So settlement is not an option under GST law. Point number two, why settlement is not an option under GST law? Is there any bar on the number of show cause notices that can be issued to a particular taxpayer for a particular period? The answer is no. Because if you see, can you say that for say period 18-19, if a particular taxpayer has been issued notice under Section 73, then there cannot be another notice for the same period under same section? The answer is no. There is no bar under the law. But someone might take a defense that if a cause of action which has already been adjudicated, there cannot be another round of adjudication on the same cause of action. In my opinion, this particular statement is partially correct, partially incorrect. I'll give you an example to substantiate my view. Let us take a situation. There's a taxpayer who has been served with notice for period 2018-19 that 2A is not matching with 3B, a national issue. Everybody must have had such notices. Before 1st of January 2022, what is the probable cause of action? Because from 1st January 2022, 16 to AA has been inserted. Before that, what is the probable cause of action? Probable cause of action could be 16 to C. The supplier has not paid the taxes to the exchequer. Now they have issued circular number 183 and 193, absolute bad in law circulars. Whenever these circulars were issued, straight away I wrote an article and I named my article as Perfect Cover Up Story. Why Perfect Cover Up Story? Because these circulars were brought in to save the demands made by the department, and it was propagated that these circulars have been brought in for the convenience of taxpayers. Rather, it was the contrary. These circulars were brought in to save their demands because there was no cause of action before 1st of January 2022, where only on the basis of assumptions department made the cases, and any case on the basis of assumptions is self-defeating. Now, let us take a situation. The taxpayer went in there, used these circulars, used or misused. You people know better than me
what is the ground reality. So they gave it to the officer. They received DRC 5 dropping the proceedings. Fees has been given, celebration started. Now, after 6 months, say DGI from any other state, say DGI Surat has done some investigation and they have come to a conclusion that few of the suppliers of this taxpayer they have endorsed in fake billing transactions and they have not paid taxes to the exchequer. Again, the probable cause of action is 16(2)(c). Period is same, 1819. This information is passed on to the regional DGI office whether show cause notice can be issued or not. Whether regional DGI can issue notice on the same cause of action which has already been adjudicated or not. Answer is there is no bar under the law. I'm not denying that that will work as your defense. You can put forward it as a defense, but there is no bar under the law that they cannot do so. There's a referential order which has been recently passed by the Honorable Punjab and Haryana High Court in the case of Group M Media, wherein what happened was Section 73 notice was issued for a cause of action. They received order dropping the proceedings were dropped. Then Section 74 on same cause of action 16(2)(c) was invoked and they went before the judiciary to challenge notice issued under Section 74, saying that 73 has already been adjudicated for that same period for same cause of action. The court came heavily and gave very strict remarks against the petitioner, saying that this whole petition is misconceived. These are very heavy remarks, let me tell you. So this petition is misconceived. In my opinion, also, there is no express bar given under the law that restricts the number of show cause notices that can be issued to a particular taxpayer for a particular period. So in such a scenario, settlement is not an option under the law. Point number three, why settlement is not an option under GST law? See, we all somehow try to feel that let us pay the taxes and buy peace of mind with the department. Before we opt such an option, let us understand what is the actual cost of settlement. Let us take a situation that there is a taxpayer who has received notice from the department saying that few of your suppliers registration has been cancelled from the retrospective date. 10 lakh rupees is the purchase amount, 2 lakh rupees is the ITC. For sake of brevity, we are taking round of figures. Now, this taxpayer, what he wants to do, see, this is the plight of our profession that he wants to pay 2 lakh rupees as reversal of ITC because it is not a considerable amount and he wants to buy peace of mind. See, this is a very innovative word, peace of mind, because we don't find any mention of this word under any statute, but we have to give it to the revenue also because they are allowing this amounts to be paid to buy peace of mind. Now we'll calculate the actual cost of settlement if even if the taxpayer is willing to pay 2 lakh rupees as reversal of input tax credit because it is not a considerable amount for the taxpayer. Now if the taxpayer is agreeing and everyone is agreeing 2 lakh rupees has to be reversed, it has to be reversed 2 lakh rupees. Now if the taxpayer is one who is saying that the input tax credit he claimed in 1819 was inadmissible, what about interest? Interest will be payable or not payable? Of course, it will be payable. Payable on gross tax liability or net tax liability? Of course, on gross tax liability, Section 50, subsection 1 proviso, there is no delay in filing of GSTR 3B returns subject to Rule 88B. Now, for 1819 cases, what is the amount of interest? Most likely, it is it must have exceeded 100%, 108%, but we'll take 100%, right? 2 plus 2 becomes 4 lakh rupees. Now, this brings us to another important question whether the show cause notice can be issued demanding only interest amount. See, this is a very peculiar issue that we face whenever the audit under Section 65 is initiated. When the audit teams come in, they see some of the taxes are discharged belatedly, so they raise the demand for only interest portion. Recently, we have had an interesting case where the audit was initiated and they issued show cause notice under Section 73 demanding only and only interest amount. Straightway, we challenged the jurisdiction of the officer, saying that there is no jurisdiction under Section 73 or either under Section 74 to demand only interest amount. Why I say so? Because if you read Section 73 and 74, it says that the proper officer shall issue the notice to the person to show cause why tax along with interest. It means interest can be demanded only and only when there is underlying demand for tax. Without underlying demand for tax, only interest cannot be demanded. There is no jurisdiction given under Section 73 or 74 to demand the only interest amount. Again, Section 75, subsection 12, which says that any areas of interest they can be recovered by issuing notice in form DRC 1B under Section 75, subsection 12, read with Rule 88C. Again, when a specific provision is given, resorting to Section 73 and 74 is gross misapplication of law. See, this is not something new because demand appropriation scheme that existed in the erstwhile regime also, if you go back under section 11A of central excise and 73 subsection 1, where this particular scheme was upheld by various honorable high courts. So what happened in this case? The officer dropped the notice for interest amount, only interest amount, and they issued a fresh show cause notice saying that this is the amount of tax along with interest, why it should not be recovered from you. And third, they said whatever the taxes you have already discharged, why it should not be appropriated against this tax liability. So the defense we took was what has already been discharged, you cannot issue a show cause notice for that liability. So there are ways and means to get out of each case. Each case is unique and there are many ways to get out of the case. So the underlying thing is there is no jurisdiction vested with the officer to demand only and only interest amount under Section 73 or 74. Now coming back to our cost, 2 plus 2, 4 lakh rupees is the cost. Now if the taxpayer is one who is saying that he has not received goods and services, still claimed input tax credit, don't you think the required animus to impose penalty under Section 74 is proved automatically? If this is not fraud, then what will be covered under the fraud? Of course, this is the fraudulent transaction. If you have not received goods and still claimed the input tax credit, the required animus to impose penalty under Section 74 is prove. Now, what is the amount of penalty specified under Section 74, subsection 1, read with Section 122 to B? 100% is the penalty amount. Again, this brings us to another very important question in the context of fake billing charges. See, whenever the allegation of fake billing is pressed into action, normally, what the department is doing, they are invoking Section 74, subsection 1. The penalty specified under Section 74, subsection 1 is corresponding to Section 122 to B. But whenever the allegation of fraud is pressed, allegation of fake billing is pressed into action, the department is required to invoke Section 122(1), where there are 21 clauses with their own ingredients. Yes, I agree. The penalty specified under Section 122(1) and the penalty specified under Section 122 2B is the same. Penalty amount is same, 100% of the tax amount, but the ingredients are different. हो सकता है sentence for kidnapping and attempt to murder is same, but the ingredients of both the offenses are different. So whenever a fake billing case is made, show cause notice is issued, and department does not invoke Section 122(1), this is a fatal error because the pith of the allegation falls down. In this case also, if the penalty is invoked under Section 74, it has to be invoked along with Section 122(1)(7) because the ingredients there are given, specific ingredients are given. Now, someone might say, if we will pay the tax and interest before the issuance of show cause notice, pre-notice consultation stage, then the amount of penalty will be 15%. Yes, I agree with you. Those who wish to take 15%, they can take 30,000 rupees. And those who wish to take 100% penalty amount, they can take 2 lakh rupees. Again, this brings us to another important question, whether the pre-notice consultations are mandatory or not. See, what is the generic perception about this Rule 142 1 capital A is, because there was amendment made in Rule 142 1 capital A by notification number 79/2020 dated 15th of October 2020, wherein the words shall were substituted, the words may were substituted with the word shall. Now it reads as the proper officer may. It means it is at the whims and the fancies of the proper officer to issue DRC1 pre-notice consultations. In my opinion, this particular view is not correct, because if you see, there has been no amendment in the corresponding law. If you read section 73 subsection 5, 74 subsection 5, which says that taxpayer can pay the tax on his own ascertainment or ascertainment by the tax officer. How the tax officer ascertains the tax before the issuance of notice? It is ascertained by issuing pre-notice consultations in form DRC 1A. Few of the experts believe that pre-notice consultations as per national litigation policy are different than DRC 1A, but in my opinion, these two documents are same. DRC 1A opportunity has to be given. See, in under section 73 does not make any of the impact, but what about section 74 notices? If the statute has given an opportunity to pay reduced amount of penalty, it could be a deciding factor for some taxpayer to decide whether to litigate or pay the demand and settle the issue. How an officer will step into the shoes of a taxpayer to decide whether he wants to litigate or settle the liability, it is not possible. When the right is given under the law, it cannot be taken away lightly without the authority of law. So, in my opinion, proper officer has to issue DRC 1A pre-notice consultations, especially in case of section 74 notices. It is required to be invoke. There is no option that they will issue or not issue, because you cannot decide it for the taxpayer. But currently, we do have a judgment from the Honorable High Court of Allahabad in case of Elish Agarwal, where the court said once you have decided not to, once you have decided to dispute the liability, there arises no need for issuing DRC 1A pre-notice consultations. In my opinion, this view will also in coming times will be changed, and divergent views will come from another or other high courts. So pre-notice consultations are mandatory. Now we have come to a figure of 6 lakh rupees or 4 lakh 30,000 rupees for 2 lakh rupees ITC reversal. Now, if the taxpayer is saying to the GST department that the purchases it received were ineligible and still input tax credit has been availed, what this taxpayer is going to go and tell the income tax department? Because section 56 of Indian Evidence Act says that information given to one department, judicial notice can be taken by another authority. You cannot appropriate and reprobate. किसी को कुछ और किसी को कुछ कह दे, ऐसा नहीं हो सकता. There is a specific section which has been inserted in the Income Tax Act by Finance Act 2020, section 271 AAD, which says that in case of any false entry into the books of accounts, the amount of penalty that shall be levied will be equivalent to 100% of the transaction value. What was the transaction value? Transaction value was 10 lakh rupees. So for this reversal of input tax credit of 2 lakh rupees, the settlement amount comes to be 16 lakh rupees or 14 lakh 30,000 rupees, which is enormous. The moment these amounts will start multiplying, multi-fold effect will come into play, and settlement is ruled out of the window. It will run away out of the window. Settlement is not an option under GST law. There is no time sooner these issues are going to get settled in GST law. Recently, I had the pleasure to go and address the state officers. I was a bit reluctant to accept this officer to go and train the state officers, but I had to accept this offer and I could not say no. I went in there, there were around 50 to 60 state officers, very experienced officers sitting in there. The first thing that I uttered out of my mouth was, "Dear sir, dear ma'am, you are not the assessing officers in GST law." This statement was not taken lightly by them. They started whispering in each other's ears, giving fishy smiles, and they kept me unattended on stage. After a few moments, one of the officers stood up and said, "If we are not the assessing officers, then why the government is paying us salaries? Why we are issuing the notices? Why we are giving the personal hearings? Why you are submitting replies to us? Why we are passing the orders?" See, this is the unfortunate situation that till the time these people will come to an understanding that they are not the assessing officers anymore in GST law, they'll keep doing what they used to do in VAT law. Bring your books of accounts to my office on so and so date. Is there any provision under the law that requires taxpayers to take their books of accounts to the officer's place? The answer is no, except section 65. For that, we have different commissionerate, different process altogether. Your ITC needs verification. Is there any provision under the law that requires ITC to be verified by the officer? The answer is no. But somehow we also feel that if somebody's car is not parked in front of GST office from morning to evening, we somehow believe that he's not a good consultant. With lot of responsibility, I say that there is no need to go to department office, and we must give it to the government, central government that has brought the personal hearing, virtual hearings. It is going to help the taxpayers only. So things have changed upside down in the GST law. Moving ahead, we all have to understand that the functionaries of the GST department, they are not the gatekeepers of justice, rather they are the creatures of the statute. If they are the creatures of the statute, likewise, there is going to be a perspective biasness whenever they operate. So whenever you receive any of the notice under GST law, the first thing we have to do is we have to check the process which is being followed has to be the correct one, not the outcome. Outcome could be anything. It could come in our favor, it could go against our favor, but the process which has to be followed has to be the correct one. So whenever you receive any of the notice under GST law, we have to check how the allegation made in the notice supports the notice itself. This is the very basic and preliminary check you have to do. Recently, there was a notice issued for 2A is not matching with 3B. So the show cause notice was issued under section 73 demanding tax along with interest and penalty, saying that your 2A is not matching with 3B, and the cause of action was you have not received goods and services till you have claimed the input tax credit. Now the show cause notice was served on the mail which was not received by the taxpayer. No personal hearing was given under section 75 subsection 4. Ex parte order was passed. Now this taxpayer came to us to seek our opinion what to do about this case. Now please think what we can do about this ex parte order. See, the what could be the grounds of appeal in this particular case? The public opinion will be, the popular opinion will be violation of section 75 subsection 4, no personal hearing was granted. I agree with you. This is the ground, but I never took this ground. Because what will happen if I'll go before the first appellate authority and tell them I was not given an opportunity to present my case? Do you think the first appellate authority will set aside the order? The answer is no. What will happen is he will say, you tell me what you have to tell. क्योंकि सास भी कभी बहू थी. Because they have been through this process of administration. Now they are the higher ranking adjudicating authorities. So the another round of adjudication will start and it will fetch us no relief. Now check the allegation. What was the allegation in the notice? The allegation in the notice was that you have not received goods and services. If I have not received goods and services and still I have claimed input tax credit, don't you think this is the allegation of fraud? If this is not the fraud, then what would be covered under the definition of fraud? This is absolutely allegation of fraud. Now, for the allegation of fraud, what is the section that ought to have been invoked? 73 or 74? For covering fraud cases, section 74 ought to have been invoked, but they invoked section 73. So by doctrine of election, they have invoked section 73. They are pressing the allegation of fraud, section 16(2)(b), and when they are issuing the notice, they are saying that there is no fraud. So the allegation and the notice are not compatible with each other. Section 73 notice is not compatible with the allegation of 16(2)(b). There arises nothing to be said. It has been three hearings. No defense has been put forward by the revenue side. You tell me through your experience what will happen to this case. The easiest way to get out of this case is we have to give the first appellate authority the easiest way to get out of the case. Only then we can expect relief from the first appellate authorities. See, replying to a notice is not a routine matter where you will supply the proper officer with all the additional information and truth you have. In litigation, truth does not matter, only the facts do. And what are the facts? Facts can be only of two categories. First, allegations left undisputed becomes a fact. Section 58 of Indian Evidence Act 1872 and Section 53 of Bharatiya Sakshi Adhiniyam 2023 effective from 1st of July 2024. Second is allegations backed by evidence becomes a fact. Only these two things are backed. Now you have to force it from this point of view. First, you have filed your returns. All the information is available with the proper officer. Proper officer has information from say n number of sources, internal or external. He has compared your information with that information, and after doing an investigation, he has come to a conclusion that there is some non-payment or evasion of tax. That's why he has issued you a notice. Show cause notice is the conclusion of the investigation. No new information once the show cause notice is issued. Show cause notice is the conclusion of the investigation, but unfortunately, we all have uncontrollable urge to prove our innocence. The moment notice is issued, we rush ourselves into we launch ourselves into the mammoth exercise of reconciliation, justification, case law precedent, and what not we all do because we have been taught and brought up in this manner. In GST, this teaching is outdated. Those who will follow these teachings of giving reconciliations, justifications, and case laws references will never ever be able to fetch the desired relief. So whenever you receive the notice under GST law, question the question, stop, think, strategize, then respond. Recently, how much time do we have, Sagarji?
We have 5 to 7 minutes,
Okay,
and
are there any
we are,
queries?
yeah, we have 4 or 5 questions for you.
Okay, then I'll
You
then
you
I'll
can please take you can take for a few minutes. Please go ahead.
no, it will because I'll start something new. It will take at least 10 minutes, so that's why I asked you. Then I think
I
we'll
think
run out of
you
time.
can. It's
Okay, okay,
interesting
okay,
section
okay.
session. So, yeah.
Okay, so question the question before you answer the question. Recently, there was a very interesting case that came before us. The audit was initiated at the taxpayers premises under section 65, subsection 6, read with rule 101, sub rule 4, and draft audit report was issued saying that there are income is appearing in the financial statements, but you have not discharged the output tax liability on that income. See, there are many transactions where income is appearing in the financials or money is transferred into the bank account, but it does not fit within the ambit of supply. How many forms of supply are given under the law? There are 8 forms of supply given under section 718. Sale, transfer, barter, exchange, lease, license, rental, disposal. 8 forms of supply are there. How many definitions of supply are given under the law? 8 definitions of supply are given under the law. 71A, 71AA, 71B, 71C, 19.3, 19.6, 31.7, 35.6. One form of supply, one definition of supply. Case itself is going to the Supreme Court. How an officer can assume that something that is appearing in the financials is from the supply? All the notices, more than 95% of the notices issued in GST law are based on assumptions, and unfortunately, we all are completing that incomplete investigation of the officer. So the demand was confirmed under Section 73, demanding output tax on the income appearing in the financials. So we went before the first appellate authority, appeal was filed. Now the personal hearing was given. I went in before the first appellate authority and I asked the lady officer saying that, ma'am, मुझे पैसे कौन देता है? Who gives me the money? See, the particular issue in this was the discounts were appearing in the financials. Accounting Standard 2, Para 6 says that if you receive the discounts, you have to reduce it from the purchase cost. But what if we receive the discounts after the end of period? You cannot reduce next year's purchase. Rules of accounting, you have to show it in other incomes. So they demanded output tax on these discounts. So I asked the first appellate authority, who gives me the money? My customer gives me the money or my supplier gives me the money? She said, of course, your customer gives you the money. How your supplier can give you the money? I said, exactly, ma'am, my point. If my supplier cannot give me the money, how in this world you have demanded output tax liability? The probable cause of action could have been, you could have invoked Rule 37, Section 16(2) proviso, saying that you have not made payment to your suppliers within 180 days, and you could have demanded reversal of input tax credit, but there is no way to demand output tax liability. She said, you have made my job very easy. Let us do one thing. We'll drop the demand for output tax, and we'll raise the demand for and confirm the demand for reversal of credit along with interest and penalty. What is the issue? This brings us to another important question, whether the first appellate authority has the power to enhance the tax liability or not. See, it sounded very remarkable to me when I read this law twice or thrice or fourth time. First, I used to understand that demands can be raised under Chapter 15 only, but it is remarkable that demand for tax can be raised under Chapter 18 also by the first appellate authority. This is not a new provision in the law. Similar provisions existed under Customs Act Section 128, capital A, Clause 3, but those provisions were never ever put to use. Now, if you speak to any of the revenue officer, they will say that the first appellate authority has the power to enhance the tax liability. Reasons they will give is, if you read proviso 2 to section 107 subsection 11, which says that if the appellate authority is of opinion that there is some short payment or non-payment of tax, they have to issue notice to the party, and by affording the opportunity of being heard, then only demand can be raised. Point number two, Rule 109 capital C, which has been notified from 26th of December 2022, which says that what is the time limit to withdraw the appeal? It says the time limit to withdraw the appeal is before the first appellate authority issues the notice for demand. So it means that revenue believes that they feel determined that first appellate authority has the power to enhance the tax liability. But why I say so that there is no power vested with the first appellate authority to enhance the demand is, first thing is, we all understand and there is enormous jurisprudence available which says that proviso is given under the law to carve out an exception. Provisos cannot expand the scope of parent legislation. Right, we are running out of time, so I'll not put much stress on this, but we all know this is a set legal principle. The proviso cannot enhance the scope of parent legislation. Point number two, if you read section 107 subsection 11, it says that first appellate authority has the power to confirm, modify, annul the demand. Contrastingly, if you read section 108 subsection 1, power of revisional authority, There the power has been given to commissioner, and it reads, commissioner has power to enhance, modify, annul the demand. 10711 word confirm is used. In 108 subsection 1 word enhance is used. Do you think this is a drafting slip? Answer is absolutely not. Legislation is wise, officers are passionate. Where the legislation wanted to give the power to the first appellate authority only and only to confirm the demand, modify the demand, or annul the demand, they have used words confirm. Where the legislation wanted to give the power to commissioner to enhance the demand, they have used the words enhance. Point number three, why first appellate authority does not has the power to enhance the liability? See, under proviso also, provisos section 2, section 107, subsection 11 says that notice has to be issued by the appellate authority. Once the appellate authority will issue notice, they will give personal hearing, they will take reply on record, and after doing all this exercise, they will pass a speaking order to enhance any of the tax liability. Don't you think this is the function of an adjudicating authority? If you are not an adjudicating authority, how will you sit on an adjudication of any tax demand? Interestingly, when you read the definition of adjudicating authority under section 2, subsection 4, the first appellate authority has been kept out of the definition of adjudicating authority. If you are not the adjudicating authority, how you will sit on adjudication to decide to enhance any tax liability? This is not possible. So combined reading of these two provisions brings us to a conclusion that first appellate authority cannot enhance the tax liability by dropping the demand for output tax liability and raising the demand for reversal of credit, for which we were never ever put to notice by the adjudicating authority. But first appellate authority has the power to update the demand notice. What is updating the demand notice? Say any notice is issued, order is passed by the adjudicating authority for sale of cars, say 28% demand is raised, but the adjudicating authority forgot to raise the demand for cess. The case travels before first appellate authority. First appellate authority confirms the demand for tax liability for 28% of tax. Now they have the power to enhance the liability, update the demand notice by raising the demand for cess, because the parent demand is staying the same. But altogether, new cause of action cannot be adjudicated by the first appellate authority. So there exists no power with the first appellate authority to enhance the tax liability. At last, I would say there are enough rights, remedies, and safeguards available under this law, but this law will help only those people who are vigilant about their rights, remedies, and safeguards. And I thank each one of you for joining, and I put it over to Sagarji for taking up queries. I can take few of the queries relating to this litigation topic. Over to you, Sagarji. I think you are on mute, Sagarji.
I'm sorry. Okay, so thank you, Ritesh ji, for taking us this GST litigation topic, and you very rightly gave the name that GST litigation, looking the GST litigations through a different lens. The GST law was launched with a self-assessment, and we should be very vigilant, and absolutely that you said that they are not the gatekeepers. GST officers are not the gatekeepers, and the GST practitioners should opt the functionaries of virtual attendance and faceless assessments rather than parking your cars in GST department. So yes, okay, let's move to the queries. We have quite a few. The session was very interesting, and people has uh, been found of that. So first question is from Swati Jayantilal Prajapati ji. What will be the probable solution to file a rectification application where order under section 73 is issued due to disallowed ITC under section 16(4) as currently portable is as currently portal is not allowing to file rectification. Portal allows only 3 months to file rectification application. However, as per notification number 22 oblique 20, 2020, sorry, 22 by 2024, taxpayer can file a rectification application within 6 months from the date of notification.
Yes, very right, Swati ji. This is the problem which a lot of taxpayers are being currently facing, and I believe there will be some updates in the system. You can file a rectification application manually till the time functionality is brought in on the GSTN portal. And I think they have taken the cognizance of this particular issue. You are not sailing alone in this boat. Everyone else is also facing this similar issue, and in the due time, they will address this issue.
Thank you, Teji. Harshil Nitin Naik also had same question, so I think hopefully it is also addressed. Next question is from Arvind Kumar Singh from Bareilly. 2020 to 21 COVID auto population 123B not there. Our assessee has filed GST 1 and 3B erroneously, filed nil without rectification or revised facility. By knowing error, made correction in annual GST 9, but section 17(5) and 6 does not profited for the same year. What action we need to take in replying before appeal?
Please,
Should-
I'm not able to understand the query. I think
Um,
need to
okay,
be retracted. Yeah.
okay. Um, let's move to next. Satish Kumar Umarshiji from Bhuj. If ITC availed for financial year 18-19 is stated to be ineligible by the officer, but nothing was concealed in books of accounts and GST return, in this case of fraud, and is this case of fraud, and can officer pass under order under section 74?
See, we all have to first check what is the reason for demanding reversal of input tax credit. See, I said the allegations has to be scrutinized when the notice is issued. Now, saying that department cannot issue 74, see, all these things are your defense. There is no, if the department believes that they have material on record to prove fraud, willful misrepresentation, or suppression of facts, they will invoke Section 74. But as a consultant, it is our job to see what is the allegation, whether the allegation fit within the definition of this given fraud, willful misrepresentation, or suppression. I don't know. Have they given any Sagarji cause of action? What is invoked
No,
allegation? No, for 1890. See,
no,
you have your defense, and you if there is section 75 subsection 2 to seek the relief. If the animus is not proved, then the notice under section 74 will be downgraded to section 73. But again, you have to plead it as a relief under 74 75 subsection 2, and if there are multiple years involved, then you can seek the relief under section 74 subsection 4. And one thing I would like to bring out here is, somehow we all believe that books of accounts are the primary source. So let me tell you, my dear friends, even the books of accounts are not the conclusive piece of evidence. Section 34 of Indian Evidence Act says that your books of accounts are not conclusive piece of evidence without the corroborating material. So in my opinion, invoking 74 is very difficult and uphill task, because mountain of evidence is required to be given by the department to prove their case. As long as you will stick to your rights and don't offer additional information and all the truth to the department, you have a good case. Back to you, Sagar.
right. Okay. Next question is from Rajesh Shirsatji from Mumbai. GST on commercial properties eligible to take credit and use against liability of supplier. I don't know
See,
what's the question,
this
but
particular
over to you.
controversy has been put to rest in the recent GST Council meeting, 55th GST Council meeting, where they have taken a decision to retrospectively amend Section 17(5). Now, conclusion of this is no input tax credit will be available on any property, immovable property, no matter whether it is given on rent or something else. So this particular issue has been put to rest by the government. As per the policy of the government, they will retrospectively amend that Section 17(5) explanation for plant or machinery definition, and plant and machinery will be inserted. So no input tax credit is available for construction of immovable property.
Okay. Let's move to next question from Arvind Kumar Singh Bareli. 1 and 3B mismatch correction made in GSTR 9 after period of 6 months. How to meet reply against 73 issued notice upon.
See, what is the cause of action? What they are issuing? See, 1 and 3B you have rectified, and what is the cause of action? Whether they have demanded reversal of credit or they have demanded output tax. I think you can please connect me offline to discuss, but I feel this this whole allegation will be self-defeating, and there's not much of in it. Right.
Mhm. And yes, another question. Waiver of interest and penalty under section 128A shall not be allowable if case adjusted by appeal order. Is it SOCA?
Orders given by the first appellate authority are covered under section 128A if the time limit to file an appeal before the appellate tribunal has not expired, which has not expired. So I believe the orders by the first appellate authority under section 73 are covered under section 128A. They are covered.
All right, I think that's it for the queries. Thank you guys. Thank you audience for being with us. Thank you Ritesh ji for sharing your expertise and making our audience more vigilant and how the government and GST laws is with us. It's just a matter of how good, how strong we are. Thank you
Thank
Ritesh
you,
ji.
Sagar ji. Namaste. Thank you.
Namaste. Thank you all for joining, and thank you CP committee and chairman, vice chairman, and the team.
Thank you so much, sir. Thank you so much, sir. जी